The global population is getting older, healthcare costs are rising with age, and technology is playing an increasingly significant role. So says the latest research from BlackRock, which offers a thematic healthcare innovation ETF, which can be found under the ticker HEAL. The product gives investors exposure to stocks linked to new technologies in healthcare. Rob Powell is a thematic investment strategist at BlackRock and joins me now. Rob, thanks for coming on. So
Pleasure.
Let's talk about the healthcare innovation theme. Why would you invest in that rather than just healthcare as a whole?
So I think there's a lot of long-term research that suggests that healthcare expenditure is going to increase globally. And this ETF is all about providing exposure to the kinds of companies that can benefit from this increased spending, so the innovative companies. So this is different from a traditional healthcare exposure in that it moves you away from maybe the big defensive names that typically drive healthcare investing and puts you more in the more technologically focused kind of names within healthcare.
So what are some of the healthcare innovations that we might expect on the horizon? I know you've been, there's one chart you've got that's about the human genome.
Yeah, so the mapping of a human genome is a great example of a new technology that's emerged in the last 20 years within the healthcare space. So we've seen the cost of mapping a genome go from around $100 million, one genome, in the early 2000s to being around $1,000 today. And that's just an example of new technologies that have come in and revolutionized the healthcare space.
And how are healthcare expenses changing? Because it's not a linear relationship, is it, between age and the cost of healthcare?
No, absolutely not. I think one of the interesting things about healthcare is that it has a positive income elasticity. So as incomes increase, people are more likely to spend more on healthcare. And it's for that reason that as we see incomes increasing across the world, we expect global expenditure, or the proportion of global GDP spent on healthcare, to increase significantly over the next few years. So it's currently at around 10% of global GDP spent on healthcare. By 2040, we expect that figure to be around 20%.
So how's the HEAL ETF been performing? Because it looks like it's been significantly outperforming the broader market.
Yeah, so obviously this is really about accessing a long-term structural trend. But what the returns of the ETF suggest is that by focusing on that long term, you can have positive outcomes in the short term. So if we just look at the returns of the Healthcare Innovation ETF over the last year, it's up 29.5%. Which is an outperformance of the broad market of around 13.7%, and outperformance of traditional healthcare, which is quite different from, of over 16%. So you can see that the returns have been very strong in the recent past.
And healthcare is generally seen as a defensive sector, but you say that this product is perhaps for someone who's willing to put a little bit more risk on the table because of that technology element.
Yes, so as I said, you will be if you look at the profile of a healthcare innovation ETF such as ours, it will be markedly different from a traditional healthcare exposure. So less exposure to mega cap pharmaceutical companies, so some of the biggest names that people will recognize, such as Shire, won't be included or aren't currently included in this ETF, and you have more exposure to smaller names that are developing new technologies. And this isn't just about US and European companies. So a lot of the drivers of performance in the ETF have come from the emerging markets and Asia in particular.
So one downside there is that you weren't exposed to the Shire and Takeda M&A activity and the increase in the share prices there, but there has been other consolidation within products within your ETF, so perhaps you could give us a bit more detail about that.
Yeah, absolutely. So M&A has been a key theme on the product since we launched it. If we look at just some of the top performers in the first quarter of 2018, we see that a lot of them have been driven by M&A. So a couple of examples: Ablinks in Belgium was acquired by Sanofi, a French company, and Juno Therapeutics in the US was acquired by Celgene. These are the two top performers. But then I would also say that it's not just about M&A. We have seen strong performance from innovative companies in Asia. So 6 of the top 10 performers in the fund were Asian over the first quarter.
What do you think is driving all those deals there, and do you think that there's going to be more deals in the pipeline?
I think one of the drivers of M&A potentially could be that the larger companies who are taking out the smaller companies, such as Ablinks and Juno, have less of a focus on R&D. So when they see a company developing a new technology, one way that they can access the potential benefits of those is by acquiring them. So that's why within a really innovation, technology-focused healthcare ETF such as this, we would expect M&A to continue going forwards.
Now, we've seen the US President Donald Trump want to crack down on the pharmaceuticals industry. There has been a bit of a backlash against the high drug prices. Do you think that drug prices could come down and that could end up being a potential headwind?
So we did see a significant focus on drug pricing from both Clinton and Trump in the run-up to the US election, which did negatively impact some of the US names within this exposure, within this ETF. As I kept on saying, this is about more than just US pharmaceuticals names, US healthcare. This is a global theme. So even if there is, if they do achieve a crackdown on drug pricing, like President Trump has talked about, we have a lot of exposure elsewhere in the world.
So you see this very much as a product to hold for a long time frame?
Yeah, I think the long-term picture regarding the demographics, the increasing number of old people, and the potential for expenditure on healthcare to go up means that this is something that we would suggest to hold for longer than your average holding.
Okay, Rob, thank you very much.
Thank you.
That was Rob Powell, thematic investment strategist at BlackRock. Thanks so much for watching IGTV. I'm Victoria Scholar, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.